Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today we're just going to talk a little bit about the prior couple of days. Some weird things have been going on. I've got some cryptocurrency news, we'll do some charts as well. So if that sounds like something you're interested in, sit back, hit that like button, relax, and let's get into this. The UK is following in the footsteps of the USA. We have seen the USA's inflation, the CPI metrics start to come down, and now here in the UK we're having a similar sort of thing, albeit a very, very small change, just 0.2%. But CPI inflation is coming down, and it's not just in America, it's here in the UK as well. PPI came in yesterday for the US and has come in at negative 0.5% versus the negative 0.1% expected. Retail sales are down as well, so the Fed is chipping away at inflation whilst keeping GDP expanding. Earnings revisions, however, at the start of 23 are worse than they were at the start of 2008. Earnings are likely to decline sharply over the following months, and you can see that here. So is it this that's putting pressure on markets? Is it the earnings that's putting pressure on the equity markets at the moment? I would make the argument that it is. It's worth pointing out, though, that stocks typically bottom 6 to 9 months before earnings do. So even if we continue to see a decrease in earnings, even if we continue to see earnings come off, it does not mean that we haven't already seen the lows for the stock market. Furthermore, according to the Bank of America, the fund managers' recession fears have already peaked, just like back in March 09 and April of 2020. Exactly what happened when stocks bottomed. If I hop into this chart, you can see here. Once this metric rolled over, the lows were already in for the equity markets, and that is exactly what we have here today. So despite the seemingly large red candles that we saw in the equity markets yesterday, and despite an undeniable rejection at resistance here off of this purple resistance line that we have had so far for the equities, we are still hanging out in no man's land. There's no real way to know what will happen. We could easily get a move now that comes down here before bouncing and going up. We could also easily get a move that just shakes out and breaks. We could also easily get a move that comes down here and completely writes off this entire thesis and invalidates the entire melt-up scenario. Anything and everything is on the table. As ever, one day at a time. We'll get to the charts at the end of this video. Something weird happened yesterday in crypto, didn't it? You're probably already aware of this, not going to spend too much time on it. But the Department of Justice Criminal Division announced they were going to hold a press conference at 12 p.m. yesterday to announce what they said was a major international cryptocurrency enforcement action. The US Treasury will also announce an action, live stream link on the Department of Justice website for more info below. So it all sounded very scary, and there was all these people speculating, oh, they're going to ban cryptocurrency, they're going to announce emergency regulations that are overly restrictive for the cryptocurrency space. This is going to be really bad. And initially, Bitcoin and cryptocurrency sold off quite heavily. However, their announcement amounted to nothing more than a nothing burger. After creating this hype and after causing a panic sell, it turned out that all they had to say was that this company that no one had ever heard of called Bitslato were going to be shut down by the Department of Justice. Keep in mind, the whole thing was super strange because this announcement from them, okay, they worked for over a year to shut down some random tiny Russian exchange, whilst the FTX exchange was literally running a multi-billion-dollar fraud right in front of them, and somehow they didn't notice that. So, I don't know. It seems like some sort of games were being played here. This is a bit unusual for them to come out with an emergency announcement and then it turn out to be just that they're shutting down some little exchange. You know, something doesn't add up here. I guess that's what I'm trying to say. To me, something doesn't add up here. But wholly speaking, I think we can just kind of shrug this one off. It was a bit of a strange one. But that did indeed occur yesterday. At the same time, the crypto firm Genesis is planning to file for Chapter 11 bankruptcy. So, even more fear, uncertainty, and doubt out there in the markets at the moment. Even more reason for the bears to be salivating over the possibility of one final dip down. But I'd like to pause here and ask you, are you surprised about this? And the answer is, if you've been following the cryptocurrency space for a while, probably not. And the reason you're not really surprised is because this has been public knowledge for quite some time, hasn't it? I think it's safe to say this has already been pretty baked into the price. I don't expect this to have much of a negative impact on the price over the coming days. The big question is, if they start having to liquidate assets, could that put downside pressure on the markets? And of course, potentially it could. But I think the bulk of this is likely to have been priced in already. And that is kind of evidenced by the chart, because even though we had the Bitslato thing yesterday with the Department of Justice, even though we've had Genesis announcing it was going to file for bankruptcy, the price is still kind of consolidating where you'd expect it to consolidate. So, and I would also like to make the argument that even if it was to come all the way back down and back test 17.6, which was the initial breakout level, before moving higher, I still think that would be absolutely healthy from a technical perspective. So also, I've pointed this out before, but I'll point it out again. We also still have a CME gap, okay? A CME gap that exists down at around 19.5K. So are we going to backfill that before we then come up and backfill the gap at 27 to 29? And I also believe there's a gap here at around 34K. So again, not really predicting anything, but I'm just saying it would be perfectly normal and perfectly within the expectations of Bitcoin's usual price action to backfill this gap at 19 something before moving higher. With the price at current levels, Bitcoin has surpassed JP Morgan in market cap. Over in Poland, Binance has been approved to operate. And from Poland to Texas, the Texas government is proposing allowing Bitcoin as an authorized investment for the state. Bitcoin mining is now one of the most sustainable industries in the world. According to the new research data from the Bitcoin Mining Council, as you can see, they have hit 58.9% sustainable energy. And speaking of Bitcoin mining, the mining computers are now made in America for the first time. So we're continuing to see the decentralization of the building of the ASIC rigs used in mining and securing the Bitcoin network, which is great to see. In other news, Ukraine wants to be the world's leading jurisdiction for Bitcoin and crypto, according to their deputy prime minister. So do you see the trend that's unfolding? Do you see what's going on here? This thing is building momentum by the day, and I'm really looking forward to seeing how the rest of this year plays out. 13% of Canadians own Bitcoin now, according to a report from the Central Bank of Canada, as you can see here. We are less than 434 days away from the next Bitcoin halving, when Bitcoin will become undeniably and indisputably the hardest asset on the planet, meaning it will have an inflation rate below that of the precious metal gold. 70% of all Bitcoin is currently in profit, and as you can see, we have now got a green dot on this chart from Plan B. From green comes orange and then to red, as you can see here. Over 85% of the entire Bitcoin supply is currently held by long-term holders, by people that have no intention of selling at these levels. We are ready for a bull run. And lastly, before we get into the charts, here's Bitcoin on a weekly chart. We have the RSI start to fan out down the bottom. We've got the histogram starting to turn green, as per the last time that the cloud pattern and the moving average formed this formation here. This is exactly what we have today. And last time this happened, it preceded a massive run from around 3K to 14K. So hopping into some charts, the dollar, is this the consolidation I talked about? Now it's sort of above and below this line. Is it going to continue to wobble around on this line? It's going to chop this line for a bit and then break down. I think it's got to do something like that if we're not going to get a counter trend bounce. But we want to continue to see this come off if it's going to be conducive to rallies in risk assets. 10-year government yield is doing what I wanted to see it do. We've lost these levels. We're now coming in for a back test. So long as we can resolve to the downside here, I'll be happy and risk should come on fairly quickly. US 2-year yield, again, you can see this. We're making new lows. First of all, we've lost this big red level. Then we've lost this level here. And now it looks like possibly coming in for a back test before a move lower. So happy days there. Again, this speaks to risk on, not risk off. Here's Bitcoin. We've kind of already touched on Bitcoin. There's not really much to say about this. Like I said earlier, I'm happy to hold this all the way to a back test to go if it's going to do that. Perhaps it's going to be shallower than most people think, and it's just going to fill that gap at 19.5 or something and then go. All I can really do for now is continue to push this trade and see what the market can give. Ethereum continues to look constructive as well. So again, a back test of the breakout level wouldn't be surprising to me, but also I wouldn't be surprised if it doesn't come that far back. Is gold working on putting in a cycle low? Is this what's going to happen? You can see here. Or is this just going to melt straight up? I don't really know. I would think this all comes down to the dollar. If the dollar can get some kind of counter trend bounce or some kind of consolidation either just on that blue support line that I showed you earlier, then you would think this has put some pressure on gold. But if the dollar's just going to continue to break down, then I would expect this to continue to melt up. So not really much I can do at the moment. I'm going to be happy to hold this trade into a cycle low if we can get one. And then I think that final time, that final push up, where I will look to take the profit on this trade. Having a strategy and sticking to it has worked well, as you can see here with silver. So we ducked out of this trade. It's kind of done a whole lot of nothing since then. I've been saying for a while I wanted to see it break out above this blue box on a strong daily close to add along, but it just hasn't given me that option yet. I wonder now if that means we've got to sort of come down here, which is fine. That's my preferred look, and then we can draw a trend line, something like this, and long the breakout of that trend line. So as ever, one day at a time, but this is shaping up to be a good example of why it's important to stick to your strategy. Miners look like they want to come and back test the breakout box, so that's absolutely fine, and the same for the junior miners, so we'll see what happens there over the coming days. Tesla, as I said, wouldn't be surprised if it did come down and back test this line. That seems to be what it's doing, so continue to push this trade and see what the market can give. All of the blockchain stocks, I think, will continue to benefit from Bitcoin's price, or should I say mirror whatever Bitcoin's price does. So obviously if Bitcoin continues to trend up, then I would expect these to follow. If Bitcoin, however, becomes weak, I would expect these to become weak also. So not really much more to say about that. As you can see, long and strong continue to push. The UK 100 getting a bit of a pullback here. So I wonder, do we have to have a line in the sand? I think we ought to, and I think it should look something like this. I think if we have a technical breakdown of that red line, it's time to exit the trade. For now, long and strong continue to push. But if this is going to roll over, if this is going to do something like this and break down, then we don't want to be anywhere near that as it's unfolding, do we? However, get some kind of bounce off of here and continue to push up like I expect it to do, then that's absolutely fine as well. But it's important to have a line in the sand, somewhere where you know where you'll get out of the trade. Interesting action from the VIX here. So we're right into resistance. Is this going to break out? If so, do we have to add a hedge? Do we have to add a hedge in case the equity exposure is about to get destroyed? If we're going to see a volatility event, if we're going to see a stock market plunge, then this is my favorite way to benefit from that plunge. For now, we're right into resistance. If we can get rejected at resistance and continue to roll over, then that should be conducive to the stock market pushing higher. But if this thing is going to break out and go, then I have to respect that, and I have to respect that that will likely end up forcing a cycle low in the equity markets over the coming days. I talked about the Dow Jones. I've been saying if you're a bear, you really wanted to see this roll over and you wanted to see it roll over quickly. So far, so good for the bears, but you really also need it to take out this cluster of lows down here. Any kind of higher low that forms here, any kind of support that resolves to the upside is indeed bullish. So we'll have to make sure that we keep an eye on this. If this gets stopped out, then that can be a trigger for a short target in the bottom down here. So one day at a time as ever. For now, continue to push this long. And for me, confirmation that the bull market is truly on would come from a breakout above this red horizontal line here. Perfect rejection at resistance for the NASDAQ. So this is not significant as of yet. Doesn't mean this could not become significant, but if we can start to come down here and we can take out those lows, this gets very bearish very quickly. However, there's always a chance this could end up being some kind of bear trap that then resolves to the upside. So for now, I continue to sit on my hands. No need to go forcing trades. I got plenty of risk on, so I'll just continue to see what the market can give. And lastly, the S&P 500 is kind of the same deal. We break out of this, we can do some sort of bear trap and break out, and that becomes a long from me on a breakout of this blue downward sloping resistance line. However, if we're going to continue to get rejected and drop down into a cycle low, wherever that forms, then that is for me where I'm looking to get long. The bears have been clawing back a little bit of ground, particularly in places like the Dow Jones and the S&P 500. So there's no doubt that that is rejection at resistance, not a bullish look at all. This is very quickly becoming bearish, although it is still technically above the breakout retest resumption level. So if you're a bull, if you want to see this resolve higher, it needs to do it pretty ASAP. It needs to do it pretty quickly. And if you're a bear, then you need to see this follow through and take out these lows here. Either way, we're going to learn something this week. So all eyes on the market for the next couple of days. If you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already, and turn the notifications on if you want to continue to get updates on all of my positions, win, lose, or exit for free. In the meantime, I hope you're doing well in life. Take care from me. All the best. Cheers. Bye.